A country imposes tariffs. Another restricts AI chips. Oil prices jump because a shipping route may close. A new government takes power. Investors rush into an IPO. Markets react. Experts debate. Headlines explode. But what if these events aren't as random as they appear? What if most economic and geopolitical decisions can be traced back to one of just three ways of viewing the world? And what if recognizing those worldviews could help us anticipate where policy is likely to move next? That's what we're exploring today. This presentation is intended solely for educational, informational, and research purposes. The objective is to explore a framework for thinking about economic, geopolitical, financial, and policy decisions. The framework presented is not intended to predict specific events, provide investment advice, or serve as a recommendation regarding any country, asset, company, or policy. Nothing in this presentation should be interpreted as investment advice, financial advice, legal advice, tax advice, or a recommendation to buy, sell, or hold any investment or asset. The purpose of this discussion is to encourage critical thinking and provide a structured way of analyzing economic and geopolitical developments. The world feels increasingly unpredictable. The modern world often appears contradictory. Governments advocate free trade while imposing tariffs. Countries seek foreign investment while restricting foreign ownership in strategic industries. Policymakers promote globalization while simultaneously encouraging domestic manufacturing and self-reliance. Technology companies operate globally while governments increasingly treat technology as a national security issue. To many observers, these developments appear inconsistent. Experts frequently disagree, governments change direction, and markets react to information that often seems difficult to interpret. The result is a growing perception that the world has become unpredictable. The real problem: most people consume information backward. A policy decision is announced. Analysts explain why it happened. Commentators debate whether it was the correct decision. Markets react, and only then do people attempt to understand what occurred. By that point, however, the decision has already been made. The opportunity to anticipate has been replaced by an effort to explain. Understanding the past has value, but it does little to help identify the direction of future decisions. The challenge is not simply understanding what happened yesterday. The challenge is identifying what is becoming more likely tomorrow. The wish. If understanding comes after the decision, then perhaps a better question exists. Is there a way to identify the direction of future policy decisions before they become headlines? Not a tool that predicts exact events. Not a model that predicts exact dates. Not a framework that claims certainty. Rather, a framework that helps identify the kinds of decisions that become more likely as certain ideas gain influence. Such a framework would not eliminate uncertainty, but it could reduce it. And in a world where uncertainty carries economic, political, and financial consequences, even a partial advantage can be valuable. Does such a thing exist? No framework can perfectly predict governments. Governments are composed of individuals, institutions, competing interests, and changing circumstances. However, when examining decades of economic policy, industrial strategy, trade disputes, geopolitical competition, and national development, patterns begin to emerge. Different countries often face different circumstances, yet they frequently arrive at surprisingly similar types of decisions. This suggests that beneath individual policies may exist a smaller set of underlying assumptions about how prosperity, security, and wealth are created. Understanding those assumptions may provide clues about future direction. The discovery. After examining economic and geopolitical decision-making across countries and decades, a recurring pattern becomes visible. Most major economic and geopolitical decisions appear to optimize for one of three objectives: prosperity through integration, security through sovereignty, or wealth through capital allocation. These objectives correspond to three dominant worldviews: the liberal, the economic nationalist, and the capitalist. Most governments are not purely one of these. Most policymakers are not purely one of these. Most decisions emerge from a combination of multiple perspectives. However, when decisions are traced back to the objective being optimized, they repeatedly tend to fall into one or a combination of these three worldviews. This observation forms the foundation of the framework. Why this matters? The value of this framework is not that it explains historical events. Many frameworks can explain what has already happened. Its value lies in helping identify the range of decisions that become more likely in the future. Once a worldview begins gaining influence, certain policy directions become more probable while others become less probable. The framework therefore functions less as a prediction tool and more as a directional compass. Its purpose is not certainty. Its purpose is identifying direction. The liberal worldview. The liberal worldview begins with the belief that prosperity increases when barriers decrease. Barriers to trade, barriers to investment, barriers to information, barriers to movement. The central assumption of the liberal worldview is that individuals, firms, and nations become wealthier when they are allowed to specialize in what they do best and exchange freely with others. Importantly, this does not require every country to have an absolute advantage in producing something better than everyone else. Instead, each country focuses on what it can produce relatively more efficiently compared to other activities within its own economy. This idea of comparative advantage allows all participants to benefit from trade, even if one country is more productive across many areas. The liberal sees the world primarily as a network of cooperation. When countries trade, both sides can benefit. When ideas flow across borders, innovation accelerates. When capital moves efficiently, resources are allocated more productively. When markets expand, opportunities increase. To the liberal, the primary objective is not self-sufficiency, but prosperity. Efficiency becomes the organizing principle. If a product can be produced more efficiently elsewhere, production should occur there. If another country has a comparative advantage, that advantage should be utilized. The liberal tends to view globalization, international trade, economic integration, and open markets as positive forces that increase overall prosperity. The question a liberal typically asks is, how do we increase the size of the pie? Not, who controls the pie? This distinction is fundamental because it shapes how liberals evaluate economic and geopolitical decisions. Signals that liberal thinking is gaining influence. If the purpose of this framework is to identify direction rather than explain the past, then it becomes important to recognize the signals that indicate a particular worldview may be gaining influence. When liberal thinking becomes more influential, certain themes tend to appear repeatedly. Policymakers begin discussing cooperation. Trade agreements receive greater attention. International institutions become more prominent. Market access becomes a priority. Economic integration is viewed as beneficial. Cross-border investment is encouraged. Supply chains are viewed primarily as sources of efficiency rather than vulnerability. The language itself often provides clues. Words such as cooperation, integration, open markets, trade facilitation, global competitiveness, economic partnership, multilateralism. These often signal the growing influence of liberal thinking. When such language becomes dominant, the direction of travel may include more trade agreements, reduced barriers, greater economic openness, expanded international cooperation, increased movement of goods, services, capital, and information. The exact policies may differ, but the direction becomes easier to identify. The economic nationalist worldview. The economic nationalist begins from a different assumption. The world is not simply a network of cooperation. It is also a system of competition. Nations compete for influence. Nations compete for resources. Nations compete for technology. Nations compete for economic strength. The economic nationalist does not reject prosperity. Rather, the economic nationalist questions whether prosperity should always take priority over security. The central concern becomes sovereignty, control, resilience, strategic capability. The economic nationalist asks questions that liberals often consider secondary. Who controls critical technologies? Who controls energy? Who controls manufacturing? Who controls strategic resources? What happens if access to these capabilities is disrupted? From this perspective, efficiency is valuable but not sufficient. A nation that becomes highly efficient while simultaneously becoming highly dependent may be creating future vulnerabilities. The economic nationalist is often willing to accept higher costs today in exchange for greater resilience tomorrow. The core question becomes, how do we preserve strategic independence? Signals that economic nationalism is gaining influence. Economic nationalism often announces itself through a recognizable set of concerns. The discussion shifts away from efficiency and toward resilience. Supply chains become security issues. Technology becomes a strategic asset. Manufacturing becomes a national priority. Industrial policy becomes acceptable. Domestic capability becomes increasingly important. The language itself provides signals. Words such as strategic autonomy, supply chain security, national resilience, economic security, critical industries, technological sovereignty, self-reliance, strategic capability. These often indicate that economic nationalist thinking is gaining influence. When these themes become dominant, the range of likely future decisions narrows. Governments may become more willing to subsidize domestic industries. Tariffs may become more likely. Export controls may increase. Domestic manufacturing initiatives may expand. Restrictions on foreign ownership in strategic sectors may appear. The exact policy remains uncertain. The direction becomes clearer. The capitalist worldview. The capitalist worldview begins with a different objective altogether. The primary concern is not prosperity at the national level, nor is it sovereignty at the national level. The primary concern is capital allocation. Where can resources generate the highest return? Capital seeks opportunity. Capital seeks productivity. Capital seeks innovation. Capital seeks growth. Unlike governments, capital is not inherently tied to geography. It is attracted to environments that offer attractive, risk-adjusted returns. As a result, capitalists often evaluate decisions differently from both liberals and economic nationalists. A liberal may prioritize overall prosperity. An economic nationalist may prioritize strategic capability. A capitalist prioritizes return on investment. This distinction frequently creates tension. What is beneficial for national strategy may not maximize returns. What maximizes returns may not strengthen domestic resilience. The capitalist worldview, therefore, provides a third lens through which economic and geopolitical developments can be understood. Its core question is, where can capital be deployed most effectively? Signals that capitalist thinking is dominating. When capitalist thinking becomes dominant, the conversation often shifts toward opportunity, profitability, productivity, and return on investment. The language becomes noticeably different. Words such as shareholder value, investment opportunity, return on capital, growth, productivity, efficiency, innovation, competitive advantage. These often indicate that capitalist thinking is influencing decision-making. When these themes become dominant, several outcomes become more likely. Capital flows toward attractive opportunities. Investment seeks the highest returns. Resources move toward productivity gains. Innovation attracts funding. Markets become primary allocators of resources. Again, the framework does not predict specific decisions. It identifies the direction of travel. If liberal thinking asks how prosperity can be increased, and economic nationalism asks how sovereignty can be preserved, then capitalism asks how capital can generate the greatest return. Understanding which of these questions is dominating the conversation provides valuable clues about the decisions that may follow. Comparing the three worldviews. At first glance, the differences between these three worldviews may appear subtle. In reality, they often begin with entirely different assumptions about how the world works. The liberal sees the individual, the consumer, and the market as the primary drivers of prosperity. The economic nationalist sees the nation-state as the primary actor. The capitalist sees capital itself as the primary actor. As a result, each worldview evaluates success differently. The liberal asks, how can prosperity be increased? The economic nationalist asks, how can sovereignty be protected? The capitalist asks, how can capital generate the highest return? These different objectives often lead to different conclusions, even when evaluating the exact same issue. A liberal may support a policy because it increases efficiency. An economic nationalist may oppose the same policy because it increases dependence. A capitalist may support or oppose the policy depending on its effect on investment returns. The disagreement often begins long before the policy debate starts. It begins with the objective being optimized. This is why intelligent people can look at the same facts and reach entirely different conclusions. They are not necessarily disagreeing on the facts. They are optimizing for different outcomes. The most important insight. This brings us to the most important insight of the framework. Most people focus on the decision. The framework focuses on the objective. Most people ask, why did this happen? The framework asks, what objective is being optimized? Prosperity? Security? Return on capital? Because once the objective becomes visible, many future decisions become easier to anticipate. The exact policy may remain uncertain. The exact timing may remain uncertain, but the direction often becomes clearer. This is why the framework is useful, not because it predicts specific events, but because it helps narrow the range of decisions that become more likely. When liberal thinking gains influence, certain policies become more probable. When economic nationalist thinking gains influence, different policies become more probable. When capitalist thinking dominates, another set of outcomes becomes more probable. The framework therefore shifts attention away from headlines and toward the incentives driving decisions. And incentives are often more stable than headlines. The same problem, three different answers. To see how powerful this can be, consider a single policy question. Where should semiconductor manufacturing occur? The liberal answers, where production is most efficient. The economic nationalist answers, where national security is strongest. The capitalist answers, where returns on investment are highest. Notice what happened. The question remained the same. The facts remained the same. The technology remained the same. Only the objective changed. Yet the conclusion changed dramatically. This is precisely why the framework matters. Because many policy debates are not arguments about facts. They are arguments about objectives. Once the objective becomes visible, the logic behind the decision often becomes much easier to understand, and in many cases, easier to anticipate. Semiconductors. Semiconductors are one of the clearest examples of the three worldviews colliding in the real world. To the liberal, semiconductor production should be organized around efficiency. If one country or region can manufacture advanced chips more effectively, then global supply chains should use that advantage. The goal is lower cost, higher output, and faster innovation through specialization. To the economic nationalist, semiconductors are not merely commercial products. They are strategic assets. They power defense systems, artificial intelligence, data centers, smartphones, electric vehicles, and critical infrastructure. From this perspective, dependence on foreign semiconductor supply chains creates national vulnerability. To the capitalist, the question is different again. The focus is on return on investment. Where can fabs be built profitably? Where is subsidy strongest? Where is talent available? Where are customers located? Where can capital earn the best risk-adjusted return? This is why semiconductor policy looks so complex. It is not one debate. It is three debates happening at the same time. Efficiency says globalize. Security says localize. Capital says optimize returns. Once economic nationalist language begins dominating the semiconductor discussion, words like supply chain security, technological sovereignty, strategic industry, export controls, and domestic capability, the direction of policy becomes easier to anticipate. More subsidies become likely. More export restrictions become likely. More domestic manufacturing incentives become likely. More government involvement becomes likely. This is the framework in action. Case study: the United States. The United States is often described as a capitalist country, but that description is incomplete. The United States contains all three worldviews simultaneously. The capitalist worldview is visible in Wall Street, venture capital, private equity, public markets, shareholder value, startup funding, and the constant search for higher returns. The liberal worldview is visible in America's long support for open markets, global trade, international institutions, alliances, multinational corporations, and the post-war economic order. The economic nationalist worldview is increasingly visible in national security policy, semiconductor restrictions, industrial subsidies, supply chain resilience, technology controls, and concerns about dependence on strategic rivals. This explains why U.S. policy can appear contradictory. The same country can promote free markets while subsidizing domestic industries. It can support globalization while restricting technology exports. It can welcome foreign capital while screening foreign investment in strategic sectors. It can encourage innovation while limiting access to certain technologies. These are not random contradictions. They reflect a competition among worldviews inside the same country. When capitalist thinking dominates, the U.S. tends to favor markets, innovation, investment, and shareholder returns. When liberal thinking dominates, the U.S. tends to favor cooperation, trade, alliances, and economic integration. When economic nationalist thinking dominates, the U.S. tends to favor industrial policy, export controls, domestic manufacturing, and strategic restrictions. So the question is not simply, what does America want? The better question is, which worldview is gaining influence inside America? That question gives a clearer sense of the direction future decisions may take. Case study: India. India is another powerful example because India is not choosing one worldview. India is attempting to balance all three. The liberal worldview is visible in India's participation in global trade, services exports, technology partnerships, digital integration, and engagement with international markets. The capitalist worldview is visible in India's effort to attract foreign investment, build startup ecosystems, expand private enterprise, deepen capital markets, and position itself as a growth destination. The economic nationalist worldview is visible in Make in India, self-reliance initiatives, domestic manufacturing, strategic sectors, defense production, digital sovereignty, and efforts to reduce dependence in critical areas. This balancing act is central to India's development strategy. India wants growth. India wants investment. India wants global relevance. But India also wants strategic autonomy. It does not want to become excessively dependent on any single country, supply chain, technology provider, or external power. Viewed casually, this can appear inconsistent. India opens some sectors while protecting others. India seeks foreign capital while promoting domestic champions. India participates in globalization while emphasizing self-reliance. But through this framework, the logic becomes clearer. India is trying to use liberal integration to access global opportunity. It is trying to use capitalist investment to accelerate growth. And it is using economic nationalism to preserve sovereignty and strategic control. The future direction of Indian policy depends on which of these forces becomes more influential in a specific sector. In services and technology exports, liberal and capitalist thinking may dominate. In defense, data, energy, infrastructure, and critical manufacturing, economic nationalist thinking may dominate. The same country can therefore move in different directions across different sectors. That is not confusion. That is strategic balancing. How to use the framework. The practical value of this framework comes from how it changes the way we read policy signals. Most people begin with the headline. A tariff is announced. A subsidy is introduced. A trade agreement is signed. An export control is imposed. A government opens or restricts foreign investment. But the headline is the end of the process, not the beginning. To use this framework, start earlier. Listen for repeated language. Watch which concerns become dominant. Identify the objective being optimized. If the conversation is about efficiency, cooperation, integration, market access, and trade, liberal thinking may be gaining influence. If the conversation is about resilience, sovereignty, national security, strategic autonomy, and domestic capability, economic nationalist thinking may be gaining influence. If the conversation is about returns, productivity, shareholder value, capital flows, growth, and profitability, capitalist thinking may be dominating. Then ask, if this worldview is gaining influence, what kinds of decisions become more likely? This is the key. The framework does not require knowing the exact future. It helps narrow the possible future. It turns noise into signals. It helps separate political language from the objective underneath. And once the objective becomes clearer, the direction of future decisions often becomes easier to see. Direction, not prediction. This framework should not be misunderstood as a crystal ball. It does not tell us exactly what policy will be announced next month. It does not tell us the exact timing of a trade restriction, subsidy, agreement, investment decision, or geopolitical shift. It does not remove uncertainty. What it does is more practical. It helps identify direction. If economic nationalist thinking gains influence, we should not be surprised by more industrial policy, more tariffs, more strategic subsidies, more export controls, and more concern about domestic capability. If liberal thinking gains influence, we should not be surprised by more cooperation, more trade agreements, more economic openness, and stronger emphasis on international institutions. If capitalist thinking dominates, we should not be surprised by capital flowing toward higher returns, market expansion, investment mobility, and pressure for efficiency. This distinction matters. Prediction says, this exact thing will happen on this exact date. Direction says, given the worldview gaining influence, these types of decisions are becoming more likely. In real-world analysis, direction is often more useful than false precision, because investors, business leaders, policymakers, and citizens rarely need perfect certainty. They need a better sense of where the world is moving. Final takeaway. Most people use the news to understand what already happened. But by the time a decision becomes news, the thinking behind that decision has usually been forming for months or years. The deeper opportunity is not simply to understand the headline. The deeper opportunity is to recognize the pattern before the headline arrives. That begins by asking 3 questions. Which worldview is gaining influence? What objective is being optimized? What direction of travel does that imply? If the objective is prosperity through integration, liberal thinking is likely shaping the decision. If the objective is security through sovereignty, economic nationalist thinking is likely shaping the decision. If the objective is wealth through capital allocation, capitalist thinking is likely shaping the decision. Most economic and geopolitical decisions do not fall randomly from the sky. They emerge from assumptions. They emerge from priorities. They emerge from worldviews. And once those worldviews become visible, the future does not become certain, but it does become less confusing. The goal is not to predict every headline. The goal is to understand the direction before the headline catches up. Identify the worldview. Identify the objective. Identify the direction of travel. That is the power of the framework.